Supply and demand is just human behavior at the marketplace. So supply means that there are more sellers and less buyers, which means you have an opportunity to buy cheaply. And demand means that there are more buyers and less sellers, which means you have an opportunity to sell at a premium. Now, you have to keep in mind that the market is dictated by what the traders deem valuable. And a lot of emotions are in play driving the market. Now, this is not a bad thing, because think about this situation. The same item, like a shoe, could have the same qualities, but one is sold at $10 and another one is sold at $10,000, depending on the value that the buyer himself places on that shoe. And it's the same thing with forex trading. So if you understand the emotions at play, then you get to sell or buy with an edge to make profit. So how do you know that you have an edge in the market using supply and demand? In this video, I will show you how I use supply and demand to anticipate the market one day before, how I know that we have the best prices to buy and sell, and how you can do this yourself. Check out the free course on Discord explaining everything, if you are the type of guy who needs everything put together and it's all in one flow. Check it out after the video. Alright, let's jump into the video. So the first thing is the weekly cycle, and the weekly cycle is simple. It's broken down into supply and demand zones. What I mean by supply and demand zones is that the high of the week is the initial demand zone, and the low of the week is the initial supply zone. Now, I am not looking to trade inside here because I don't know what's in here. What I know is that when we come to the high of the week, there is more demand. If we come to the low of the week, there is more supply. So that gives me the first edge in the market. Monday is the first day of the week. So obviously, the high and the low of the week will be set on Monday. Now, on Tuesday, price might break out. So if price breaks out on Tuesday, and then at the end of the day, price closes back inside of the range like that, then I know that the demand zone is ready and I am preparing myself to start selling. Now, this is because a failed breakout at the high of week equals sell next day. Simply put, and a failed breakout at the low of the week, it means buy the next day. Simple as that. And this is how I am able to anticipate demand zones and supply zones one day before. If we don't have a failed breakout, all we do is we readjust our high to that new high of the week, and then we wait for another failed breakout to tell us, alright, we are ready, the demand is there, or the supply is there. Now, also, it's very important to note that the high of the week is the ultimate place where we have demand. So when we get the setup, which I'm going to show you later in the video, if we get that setup at the high of the week, then we have already triggered the demand. So we start selling. Now, moving on to the next step. So we have already gotten a failed breakout, or price is at the high of the week. What exactly are we looking for? So, on that trading day, so let's say for example, Tuesday gave us a failed breakout. On Wednesday, we are selling. On Wednesday, we are not selling just willy-nilly, stupidly. We have a specific timing window to come and time the market to see if we get a setup that is aligned with the overall bias. So the first step is time. Now, when I say time, it's timing window, which means Asia is 8 to 11 p.m. New York time, and then London is 2 to 5 a.m. New York time, and then New York is 8 to 11 a.m. New York time. Simply put. So let's assume we got this set up in the London session. So that will be 2 to 5 a.m. Now, obviously, when we come to the screen, the time inside, we don't have anything. So we are interested in price action before the timing window, because that sets the high and the low of the day. So on this trading day, the demand is at the high of the day and the supply is at the low of the day. So anything inside is uninteresting to us. We want price either at the demand zone or the supply zone. So once we have the high of the day in place and our timing window to know when to begin looking for setups and when to end, we let the first hour close. So in the first hour, we don't do anything. We just let price do its thing. And there are two things that could happen. Price might stay within the range of the demand and supply zone, or price might break out or pin that demand or supply zone. So what we do is the first hour we adjust the high. Or if we are buying, we adjust the low. Simple. And then now the next step, and here is the process. I will link this document down to the video so that you can download it. The second, so after we have adjusted the high or the low accordingly, we wait for a breakout. And a breakout is now when price is coming back to the demand zone. And it needs to break out with one candle. So it's a one candle breakout like that. Now, what this is doing is that it's clearing the liquidity here, because this is where we have a lot of demand. So once this liquidity is cleared, then we have the fuel to take us back to the supply zone. Simple. And the market will always follow the money. So if we get a setup at the demand zone, we are getting out at the supply zone. Because at the supply, we will have people who will take our orders. Now, once we see the breakout, we look for a 1, 2, 3 pattern. And a 1, 2, 3 pattern is this move here. So the first move up, second move down, third move up. So this is the 1, 2, 3. And after that, we want to see the next candle after the breakout being opposite to the breakout. Then we have a template for reversing from the demand area to the supply area. So how does this look like in real life? Let's look at an example. So in this case, we have a bias to sell. So we have the timing window between 2 and 5 a.m. New York time. And then we have our high of the day there. So these are our demand and supply area. This is the demand zone, supply zone. All right. The next thing is we wait for the first hour to close. So first hour closes there. The first hour is inside of the high and the low, meaning we don't have any adjustment to make. Then we wait for the breakout and we get this breakout. Once we get the breakout, we look for the 1, 2, 3. And this is the 1, 2, 3. And the next candle is bearish. We have a template that will get us from demand, damned demand, whatever, to supply. Simple. Now, I am telling you this is the setup to look for. 1, 2, 3. and then the next candle is bearish, we are in. So the next step is we move to the 1 minute time frame. And in the 1 minute time frame, we are looking at the marketplace like a real market. We are looking at the buyers and the sellers. So let's look at the story here. We had these buyers coming into the market, and then the sellers started coming into the market, pushing the market down. Then boom, we have buyers coming into the market. And if we are selling, we want to sell to the buyers. Now price started again creating lower lows, showing us that the sellers are now in place, but we are selling to the buyers. So once we break structure here, so we broke structure in this area, we got the retest, and then we got the engulfment. This is our entry, stops above that high, and we are targeting the low of the day. And this was a massive trade back to the low of the week. So if you'd like to learn more about this strategy, check out the course on Discord and subscribe.